Everyone wants to be financially comfortable, but building a strong financial future can be tough. It's not enough to simply save to create long-term wealth, you'll need to invest. Finding the right investments can be challenging though, because not all stocks are created equal. Choose the wrong stocks or funds and it could wreak havoc on your finances. In this video, we'll review 4 ETFs that make fantastic long-term investments. If you invest consistently and stay invested for as long as you can, these funds can help you create a strong financial future and set you up for life. Hey there, my name is Ken. If you are new to the channel, here I talk about personal finance and investments. Make sure to trade the like button and invest in subscription to the channel. You're also welcome to support the channel, all the links are down in the description. So first ETF that we're gonna talk about is Vanguard Total Stock Market ETF. The ticker is VTI. This is a fund that contains 3,781 stocks as per today. They are from small, mid-sized and large companies across a wide variety of industries. Its goal is to replicate the performance of the stock market as a whole, which makes it a relatively safe investment. The stock market itself does experience short-term volatility, but it's earned positive returns over the long run. This ETF was established in 2001 and since then it has earned an average annual return of around 8% per year. Keep in mind that this doesn't necessarily mean you'll earn 8% returns each and every year. There will be some years you'll experience off-the-charts returns, while in other years you'll see losses. Over time though, those returns may average out to around 8% per year. So how far will this ETF get you? Let's say you began investing $300 per month while earning an 8% average annual return. After 30 years, you'd have roughly $408,000 accumulated. Well, this is just an estimate, of course, and there are never any guarantees when it comes to the stock market. But the more consistently you invest and the longer you continue investing, the more money you can potentially make. Second ETF on the list is Vanguard S&P 500 ETF. The ticker is VOO. This ETF aims to mirror the S&P 500 itself. It includes just over 500 stocks from some of the largest and strongest companies in the United States. The biggest difference between the S&P 500 ETF and the total stock market ETF is that the S&P 500 ETF only includes large cap stocks. The total stock market ETF contains large cap, mid cap and small cap holdings. Large cap stocks tend to experience less growth than their smaller counterparts, but they're also less volatile. Since this fund's inception in 2010, it earned an average annual return of around 15% per year. However, this is mostly a result of the incredible bull market we've experienced since the tail end of the Great Recession, so it's unrealistic to assume this fund will continue earning 15% average return over the next few decades. The S&P 500 itself has earned average returns of around 10% per year since its inception. Again, this doesn't mean you'll earn 10% returns year after year, but rather as an average over time. If you were to invest $300 per month while earning a 10% average annual return, you would have around $592,000 invested after 30 years. Next one is Vanguard Growth ETF, VUG. This ETF includes 276 stocks that have the potential to experience rapid growth. This means you are more likely to experience higher than average returns, but that comes with higher levels of risk too. High growth companies tend to be more volatile than well-established companies. The good news though is that some of the largest stocks in this fund are tech giants like Apple, Microsoft and Amazon. While these companies have experienced exponential growth, they are also relatively stable stocks. This fund was established in 2004 and since then it has earned an average return around 11% per year. If you were to invest $300 per month while earning an 11% average annual return, you'd have around $716,000 after 30 years. And here's the fourth ETF, Vanguard Information Technology ETF. The ticker is VGT. This is a fund that focuses only on the tech sector. It includes 333 stocks that are all in the information technology industry. Because all the stocks in this ETF are in the same industry, this fund doesn't provide as much diversification as others on the list. For that reason, it is wise to invest in at least one other broad market fund like an S&P 500 ETF or total stock market ETF in addition to this ETF to avoid putting all your eggs in one basket. The advantage of investing in this fund is that tech stocks are known for their growth, so this ETF is more likely to experience higher returns. In fact, since its inception in 2004, this fund has earned an average return of around 13% per year. If you invested the same $300 per month while earning an average return of 13% per year, you'd have approximately $1.056 million after 30 years. Investing in the stock market is an excellent way to build wealth over time. With the right ETFs and enough patience, you can earn more than you might think. Let me know in the comments what do you think of ETF investing. Here are more other videos about personal finance and investments. Make sure to subscribe to the channel, like the video and hit the notification bell. See you in the next video.